Good morning. Inflation rose moderately in April after a small decline in March. Not surprisingly, shelter continues to contribute the most to inflation, and it accounted for more than half of all of the overall price rise that we saw in April. Also contributing to higher prices were household utilities, furnishings, and healthcare. The biggest subtractor from inflation in April was actually airfares, which fell 3% on the month. That's a very large decline, and that may reflect much softer demand for airfares given the sharp decline we've seen in consumer sentiment. Some good news is that food prices moved down slightly in April, and we also saw a decline in communication services, and a big piece of that is the cost of cell phone plans. Despite this relatively moderate inflation picture, that seems unlikely to be sustained in coming months. We have yet to see tariffs begin to really feed through to consumer prices. And despite the agreement between the U.S. and China that has removed the massive tariffs on trade between the two countries, goods from China are still going to be subject to a 30% tax as they come into the country. And most other countries' imports into the U.S. are subject to a 10% rate of tariff. This is going to feed through, and so we're likely to begin to see that category of non-energy goods pick up in coming months. What does this mean for Federal Reserve policy? Well, first of all, the Consumer Price Index is not the measure of prices that they follow most closely. Instead, they look primarily at the personal consumption expenditure measure, which is a broader measure of overall price movements for consumers in the overall economy. We won't get data for April on that until the end of the month. But I think the Fed is going to have to see a sustained downturn, a clearer pattern of falling prices before they're going to feel comfortable reducing interest rates if that's needed to offset weakening in the economy, should that begin to develop as we go forward. Thanks.